Hello and welcome back to Markets at Noon. Let's just look at what's happening with Nifty flat with a positive bias. That is how you would describe 10,350 still intact. A lot of stocks reacting to numbers, news flow that is coming in from all across. So that's broadly, what you're seeing. Let's welcome in the management at HOEC now, Mr. P. Elango. MD at the company is now with us. Mr. Elango, thank you so much for taking out time for us. Could you just tell us with where the crude price is? There was some comment recently which suggested that HOEC's cost of production has gone down. Can you just tell us what is the cost of production? What is the sort of recent discovery that the company has done?
Yeah, the crude prices, as you know, since the big crash that happened, crude prices have climbed up gradually. Now it is crossed 40. And the industry believe that it should move up further. In HOEC, we had an excellent discovery of resource base in Mumbai High called B-80. This was a discovered small field in which we did a two-well drilling campaign and found resources that can produce about 8,000 barrels of oil equivalent, consisting of 5,000 barrels of oil and about 3,000 barrels of oil equivalent gas as such. HOEC holds 50% stake in the block, and we've done our numbers that this field would provide about 25% post-tax return, even at a price of $35 per barrel. So it's an extremely viable development. Therefore, we are all very excited that we have already completed about 75% of the project. We are focusing on the balance 25% and expect to bring the field to production by end of this year, so that from next financial year, we would have almost doubled our current production capacity.
Right. When I just talk about the capacity that you were just talking about, the enhanced production capacity, when does it start to give cash flows? You think FY21 this year, despite the lockdown, the sort of issues that one is facing in, it would start to show in the numbers, or probably towards second half of next year, or 22 will be the main one?
What we are looking at is to complete the program, the project by end of this calendar year. But because of the current lockdown situation, it may slip by a couple of months. But definitely from 1st April of next financial year, we would have full production from this field. So the numbers will totally reflect in the next financial year, although our effort would be to catch a little bit of that in the current financial year also.
All right. Okay. Hi, Mr. Elango. This is Mubina as well joining in. I want to understand that, based on these new discoveries you've made, your new cost of production, etc. as well, what's, the profitability level that you would be looking at HOEC? I'm assuming it would be a little precarious because of what we're seeing in terms of pricing. So if you could just talk to us about the outlook on future profitability, perhaps on break-even on various different projects and wells.
Yeah. One of the difference that we brought to the industry is to focus on what we call modular or cube development, in which instead of building gas and oil processing facilities in a conventional manner, you follow the automobile sector model of a standard design, standard equipment, so that they can be modularized and brought in containers into the country. And essentially, then you kind of assemble the plant rather quickly. This is what we used in developing our gas field in Dirok on a fast-track basis, because as you know, in a state like Assam, there is a continuous rain for 8 to 9 months in year. Therefore, when you follow this kind of a modular approach, where you build a plant outside and bring it into the country, you're able to monetize the discoveries rather quickly. We followed a similar method for our B-80 development. Normally, you drill the wells, discover the resources, then you develop the facilities that are required to process the oil and gas. In this case, we bought an old rig in Middle East and converted that as a mobile offshore process unit The unit is already ready. It's basically a vessel you can tow and bring it to the location, which we intend to do by end of this year. And then, therefore, your time from discovery to delivery is shortened considerably. Obviously, you take certain calculated risk in doing that. But also, by opting for this kind of an approach, you're able to both reduce your capex as well as the operating cost, because instead of going for fit for purpose, you go for standard modularized design. So this was possible because of the shale gas revolution, shale oil, shale revolution that happened in US. Due to that, there is a lot of standardization of equipment and facilities has happened. That is something we are trying to bring to India as well. So overall, because of this kind of an approach, our break-even prices for both an oil and gas, for example, in gas in Assam, our break-even price is less than $1 per MMBTU. Therefore, we are able to operate profitably even in a current lower price environment by focusing more on volume offtake. Similarly, most of our field that we are currently having in onshore, the break-even point would be less than $15 per barrel. Offshore would be obviously slightly higher. We are looking at, for B-80, around $30 to $35, with $35 with some return on the investment as such. So we are very comfortable that we would be able to not only sustain but grow as well in the current price environment by focusing on adding more production growth from a very robust portfolio of assets that we already have. So the strategy has been, rather than worried about the prices, focus on both the volume and the cost. And by being a very lean organization, we are less than 100 people. We are trying to follow typically a Ola of oil and gas model. So can you create a Uber or a Ola in oil and gas industry? This was a question 5 years back we asked ourselves. I think we found an answer, and we are delighted that we are on the right track.
Well, it all sounds very exciting and interesting. Just $1 is the kind of break even, and hence HOEC perhaps is not too perturbed by the kind of crash that we had seen, recently. But thanks so much, Mr. Elango. We'd love to connect with you further as you, of course, keep making new and new discoveries, and your production as well keeps increasing. Thanks so much for that. Quick